Hey guys, welcome back. In today's video, we are talking about the AMC share offering, loading up on shares, and many more in this video. First, we're taking a look at this. So this is the AMC's new 50 million share offering. Now, what I want to talk about in this video is basically understanding the accumulation, and really my opinions on it. Now, some of the things we have to understand first is some of the agreements, some of the filings, the fine details in this whole agreement. So firstly, they're obviously offering 50 million shares, and they agree to deliver shares in the future through the forward purchasing agreement. We have to understand is that AMC receives prepayment for shares sold through these forward agreements and may receive additional payments upon settlement. They have also set a minimum price threshold at which shares can be sold. So this is what we have to understand. Now also is that they will receive his prepayments from the forward agreement at a preset price, but will not directly benefit from the sale of Goldman Sachs hedging shares by the forward counterparty if they sell them above AMC's set price in the future. Now, again, just to clarify, Goldman Sachs is the firm that's in charge of obviously doing this whole deal. Now, I've always talked about, like I said, make sure you check out the DD by Biotech Moose. He's obviously gone more in depth into this. I want to give his view and obviously my view as well, and some other views to really understand what is happening, because we have to look at this from multiple different perspectives to really understand, what are the pros and cons. Of course, there will always be advantages and there will always be disadvantages. That's something we have to understand, but it's to understand, is it better for us or is it bad for us? Now, in my opinion, this is something that I've always said that will obviously happen, because one of the biggest things that we talked about in terms of keeping the squeeze plays alive is by AMC being alive, is by AMC avoiding bankruptcy, is by AMC improving their fundamentals. And one of the things that will improve the fundamentals is if they have the cash, and whether that be through revenue, whether that be selling shares in order to pay off debt, in order to make new investments, and therefore that will grow AMC in the future. And what we have to understand is that manipulation has prevented AMC from raising capital from a previous ATM, a deal to sell shares at 566. One of the things we have to understand is that AMC, like we've seen in the past, when tackled by media, one of the biggest problem is the debt issues. And we've seen how AMC price is being suppressed, especially when we understand is that if AMC price were to be higher, obviously we have the conversion of shares to equity in order to pay off the debt. And that's something that we've talked about in the past. And precisely because of that is why we continuously see the suppression and the manipulation there is for AMC. And so it's to understand is that they were trying to obviously prevent AMC from raising capital. And so make no mistake, the manipulation by short seller is intentional to prevent AMC from raising any capital towards its upgrades and have cash to run its businesses. Like we talked about, AMC shorts have only two ways of getting out of this whole situation. The first, for AMC to go bankrupt, and second, for all the retail investors to sell. Now, when you take a look at this, which one is more possible? Well, for all retail sellers to sell, that's very unlikely. For AMC to go bankrupt, that's still very unlikely. But in comparison to retail selling the whole shares, it's obviously the more likely option. And we've seen with media how one of the biggest problems they always attack about AMC is, of course, about its debt issues. We've talked about how this debt issue isn't something that is extremely serious. It's not, something that we can foresee that will bankrupt AMC. But, nevertheless, there is still a problem, whether it's big or small. And what we're doing now is attacking that problem. We're essentially stopping and ending the short thesis. Now, the short thesis at the start was just talking about AMC will make no revenue. That's obviously not the case, and now they've gone into debt. But this is precisely what allows AMC to improve their fundamentals. One of the biggest things we've seen with AMC is how debt has stopped AMC's ability to obviously issue out dividends. And dividend is a massive thing we can have to obviously attack the shorts, because shorts are responsible for paying the dividends if this company were to offer out dividends. So if we have the money, we can pay off the debt and then we can issue out dividends. We're making shorts pay even more money. One of the things you have to understand, again, I highly recommend you guys to take a full look at Biotech's due diligence, is that remember, we're up against people who've spent a lot of money figuring out exactly how to manipulate us. You never know who they are or which direction they're going to be pushing in. Once you keep that in mind, things get much easier. Everyone makes mistakes. The important thing is to learn from them. And so we've seen how they've tried to use, media articles. We've seen how they try to use the different methods. And again, some people may not have seen these methods at start, and I will admit as well, some of the things that I've seen in this whole time of covering this whole thing, you know, some of the methods I've never heard of in the past, but when we found out about them, we obviously did the research, we did in-depth analysis, and we understood what is actually happening. And so remember, they are spending millions of dollars every single day to find new methods of manipulating the shares, to continuously finance the shorts, to continuously make new synthetics, and that's what they're doing. And we can see the media articles how it's trying to use against us as well. You can see tons of shills bashing CEO Adam for doing exactly what he said he would do: raising capital, strengthening AMC fundamentals, and securing long-term survival and prosperity of AMC. Also not at all convinced that this is a momentum killer, may turn out to be the total opposite. So, you know, obviously we see AMC down 9% today. Now, again, when it's news of dilution, yes, this is something that we talked about. Like I said, there's always going to be the pros and cons of a whole decision being made. It's about understanding whether it's more beneficial or bad for us. And again, like I said, in my opinion, it is more beneficial. Now, we are seeing this, you know, quote unquote momentum killer as we see AMC down 9%. But what I think is more important in terms about the long-term prosperity, like we talked about here. Remember, Adam Aaron has always talked about how he wants to improve the company, how he thinks the fundamental is the key part. And I do agree with this as well, because I understand why people will obviously talk about, you know, these are bad decisions being made, etc., etc. Like I said, I can see where the disadvantages are coming from. But what we also have to understand is that the whole reason that the shorts are still trapped in this play, the whole reason the squeeze play is even alive, is because AMC is still up and running. It's because AMC is not bankrupted. And that's done by the management. That's done by the fact that they've raised cash to pay off the debts, to use the money, to make investments, to continuously improve their revenue streams. You know, these are all done by the fact they have capital. And so this really highlights the importance of capitals. And again, I am curious, you know, to hear what you guys think. Like I said, it's not just all kind of, you know, sunshine and rainbow. Yes, there will be negative parts about this, but again, it's about weighing it. It's about understanding truly, you know, what is happening right now. And what we also have to understand is that their recent filing indicates that they plan to sell shares gradually, contingent on favorable market prices rather than immediately. And so this is the main part. They're not just dumping 50 million shares all at once on the market. This is something that will be done on good market prices at a kind of a progression, and that's what's important. And you can see that the proceeds from this offering are obviously intended to enhance AMC's liquidity, reduce debt, and invest in improvements to its theaters under the AMC Go plan. We've recently seen how AMC obviously talked about the AMC Go plan. And so this is something that, again, we were expecting, especially when we understood that shorts were not allowing us to obviously increase our price, because that's what's limiting us. Remember this, shorts are limiting AMC because they are afraid of AMC raising money. So they are also highlighting the importance of what it is to have capital for AMC. And so again, I can see why people obviously think bad of this, but it's also about understanding how big and important of a role capital and liquidity really plays for AMC. Furthermore, you can see, you know, they talk about dilution and how it's going to obviously give shorts a way out. Like I said, I truly believe that there are only two ways out. One, for AMC to go bankrupt, or two, for retail investors to all leave AMC and it becomes a fully institutional owned stock. And the reason why I say this, and not talking about how, you know, dilution is allowing them to actually cover their shares, is because 50 million, like we see here, is a spin in the ocean of billions and billions of naked fake synthetic shares. We've seen how they've created millions of shares in the past. We talked about how Citibank created 400 million shares of AMC synthetics offshore, the Brazilian ADR shares that we've covered in the past. We've seen how there are quadrillions of tokens. So we understand that there is a scarcity, that there is a very, very limited supply and a very big demand for shares of AMC that they can't fulfill. And so in this case, 50 million, even when you just compare it with the 400 million they've created for, you know, just with Citibank, that is still nothing. And again, this is only with one particular set. We're talking about the billions that have created in the past before. And so, like I said, I do think that this is not going to be having the effect that people are saying in terms of allowing shorts to cover. And you can also see here, there's no such thing as dilution for AMC. What do you think the brokers have been selling the public over the last 4 years? Over the last 4 years, there have been no available to locate shares. There is most likely quadrillions of AMC shares outstanding. Now, when we talked about that the float of AMC has been sold multiple times, we've seen it at crazy numbers. We've seen it at different ranges. Some say 10 times the float, 40 times the float, even 100 times the float. And so when you understand that that many amount of the float has been sold, how is 50 million going to allow them to be covering, all these synthetics that they have obviously made in the past? And it's also, you can see how people are obviously loading up, adding another 100k AMC shares, $100,000 worth of AMC shares. And you can see 22,000 shares. You can also see the same people that think AMC can't break out due to dilution are the same people that thought XRP can't break out due to Ripple diluting monthly for the past 6+ years. AMC is a stock with a market cap of 1.5 billion. Once Wall Street accumulates enough shares, it will be the front and media of every news media. And we're already seeing how institutions are obviously loading up on AMC. And so that's what we talked about with the importance of understanding of truly what is happening. And you guys, thanks for watching this video. I'll catch you guys next time.